We are seeing quite a lot of movement when it comes to treasuries. Are they worried about what President Trump could say tonight, or is it a pure monetary policy move?
I think the drift in US Treasuries yields higher has been a trend since the start of this year. And markets are trying to square the circle as to what this really means. The data remains strong in the US, but the dollar is not responding. Now, whether that's a premium on Treasury yields given concerns about the longer-term dynamics of the US deficit is perhaps one explanation. But ultimately, the markets over the next kind of 24 hours will probably more focus on what the Fed has to say rather than the State of the Union speech.
James, what do you make of this kind of quite actually swift repricing of treasuries? Is it a trend or is it a blip?
I think that US 10-year yields will head to 3%, but I certainly don't think that they will head to 3.5%. And for me, that's the critical challenge for investors. I mean, after all, 3%, we're still talking about nominal yields that are well below the sustainable rate of growth that the US economy can enjoy. So I do think that in time, bond yields have to rise more globally. As for why the dollar is going down, I would say the dollar always goes down in an environment where US growth is below the global average. Madame Lagarde is talking about 3.9 percentage points for the global economy this year and next. The US will not achieve that.
Kamal, is this a brutal move? I mean, as simple as that. Everybody, Bill Gross agrees with James Bevan that we're going to see moderation in the move higher in yields. But Kamal, are we seeing brutal moves in foreign exchange yet? From my charts, I would say no, but am I wrong?
I think you're seeing moves against the dollar more generally. Looking at the Euro Trade Weighted Index, Tom, this was a big focus ahead of the ECB meeting. The euro hasn't actually moved a huge amount. It's around about 0.5, 0.6% higher. So the market really is focusing, as James has mentioned, that the dollar historically doesn't perform well through a global tightening cycle. We're having a synchronized pickup in growth. We're having other central banks, Bank of Canada, perhaps the Bank of England, other central banks starting to reprice their expectations of monetary policy. So it's not a huge surprise in terms of that historical framework that the dollar is coming under some pressure here during this phase of the US tightening cycle.